Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Preps. Mr. Israel here with Joel Elconin and Dennis Stick. Okay, we are going to take a quick break and we're going to be right back to the volume. Oh, and I think now we do. Oh, okay, we'll be right back. So my Zoom just crashed, so bear with me. Yep. Yeah, I know. Bear with me. Zoom crash. Sorry. I'm doing it.
Do you make it all in a meeting?
Yeah.
Okay.
Zoom just calmed down. Well, that's the first thing. I don't think we're in target. All right. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Stick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Stick. Hope everyone had a good weekend. We are up with the news of the morning. Allergan got some stuff going on. A big note this morning from Deutsche Bank on GM. We'll talk about that. Our guest today, a tech guy, Michael Pachter, analyst at Wedbush Securities, will join us as well at 8:35. Joel, what's doing in the markets?
S&Ps are down a buck. We got up to that familiar resistance area. We had Monday through Thursday's highs between 25.06 and 07.25. All-time closing high was 04.75. We made 04.5 high, low 95. I don't know. We're still in the trading range, so I'm not going to make any big calls here until we break out of the trading range. Soho was talking about crude over 51. I do want to talk about crude here for a second. Last 4 or 5 sessions been struggling with $51. We are now over 51. Is this a breakout in the crude oil market, or will we stay in the long-term trading range? I'll show you the weekly here. We've struggled this area quite a few times. Gold down $1.90, 12.95.60, losing 1,300, and silver under 17, down 5 cents at 16.94. Dennis, 8:07. How are you doing on this Monday morning?
Oh, I'm tired today.
Why?
It's
Why
one
are
of
you
those
tired?
weekends. You know what? The sun just beat me up there all weekend. What a weekend, though. I mean, you're talking like up, in cottage country. It was like 88 degrees, which is crazy on Georgian Bay, doing some boating there. And it was nice out at the beach. I mean, it felt like a July day. How hot was it in the morning?
It was hot.
90s.
It was hot. Let me tell you, I went to the Michigan Renaissance Festival on Saturday, and it was extremely hot. And there were people dressed up in full-on knight and shining armor get up, and people had heat exhaustion. It was really hot this weekend.
Yeah, I actually took my kid to a fair on Saturday night, so at 5 o'clock, and I was like, oh, it'll be fine. It was horrible. It was 85 degrees, no shade, sun shining down on you, trying to go on, get my kid on these rides and stuff, and it was just so hot. And I don't know, you can't. It's just certain things you can do when it's hot out. The fair is not one of them.
Yeah, well, it's better than a hurricane. That's all I have to say.
Yeah, but anyway, so it's a beautiful. I can't argue with this with September. This is unbelievable. This type of weather here, so it's got to be almost record-setting. I don't remember September ever this hot, but almost too hot. So and then so it was one of these weekends. That's why I'm tired. So I had another issue too, and I'm calling it Watermelon Gate.
Watermelon Gate?
Ask me about Watermelon.
What
Gate,
is
yes.
Watermelon Gate?
Okay, so my kid's 2.5 years old, and often in the middle of the night he requests a bottle. So, rather than fight him on it, I just go upstairs and I get him a bottle. So it's 3:30 in the morning. I'm half asleep. I go upstairs and go into the kitchen. I'm gonna make my kid up a bottle. I'm like, what is that smell? Something smells. And I'm like, I open the window. Is it coming from outside? I'm looking, I'm like, what is just smells in my kitchen? And then I looked down at the floor. I was like, oh, I got another flood. I'm like, there's a flood on the floor. I'm like, what is all this water? So I'm following the trail of water. I even look up at my roof. Is my roof leaking? I'm like, but it didn't rain. I'm like, where is this water coming from? And then I look, watermelon leaked out and kind of exploded all over my kitchen. Not even kidding. The watermelon leaked out so much water, so it's covered the whole countertop, covered the stove, leaked down my kitchen cabinets, onto the kitchen floor, all under the refrigerator, found a hole where my electrical cords, because I pulled the fridge back out, found a hole and went down into the walls. It just reeked in there. So I am at 3:30 in the morning. I'm like, oh, this is the worst thing ever. So I wake my wife up, and we're sitting there for an hour in the middle of the night, Saturday night, cleaning the floor and trying to get rid of this rotten watermelon smell. So anyways, moral of the story is don't leave watermelon on your kitchen counter. And I guess there was, a little hole or something. Somehow, anyways, it was rotten and then leaked all the way out. Horrible thing to wake up to at 3:30 in the morning. So I'm calling it Watermelon Gate.
I thought you were going to say you woke up Laura to clean it up and then you went back to bed.
That's what I should have did. No, I actually tried to clean it for like 20 minutes and I was like, I wasn't getting, because I'm not that good with the cleaning stuff. So, Laura, then she gets like chemicals out and get everything. And, we have it pretty good now. I actually went in there this morning. This was 2 days later and it doesn't stink. But I was like, this just reeks when you get a little bit of rot. Like, it's one thing to get water in your house leaking through. Watermelon juice. That's a whole other level. I don't know how many ants or fruit flies or what's going to start. But so moral story, we're teaching you this here this morning. We often teach you stock tricks. Don't leave a watermelon on your kitchen counter if you suspect it might be a little bit old, because if it goes to, leak on you or something, all that water just comes out. The watermelon, literally, I should take a picture of it. It's like just completely empty. It's a hollow shell. Everything just flowed out of it. Unbelievable thing to wake up to. Horrible.
You should have given the kid the watermelon instead of the
Watermelon Gate. That's what I'm calling it.
RD has seen that before.
Too hot and Watermelon Gate.
But you are long GM this morning, and so all is good.
I'm not long GM this morning, but if you were long GM this morning, you'd be pretty happy here because we are over $40, Joel, in GM for the first time in about 3 years. And this is off the backs of a Deutsche Bank note. Spencer, details.
I got the note here. Super bullish note from Deutsche Bank on GM. I don't remember. Here, let me pull it up real quick. Is it an upgrade? Yeah, it is an upgrade. A buy rating, and they're increasing their price target from $36 to $51. Here's what they say. Basically, in pricing the car of tomorrow, basically GM is first when it comes to autonomous vehicles. So the GM's autonomous vehicles will be, this is what it says, will be ready for commercial deployment without human drivers much sooner than widely expected, within quarters, not years, and potentially years ahead of its competitors. And that's basically the reason why that they see that they're super bullish GM right now.
Okay, couple of things here. First of all, we've been saying this on the show for a while. GM and Ford, I don't believe, are just going to stand by and let, time pass them by, and they're just going to be old, and not get into the autonomous cars market. So, this is not surprising to me that GM, it could potentially be a leader here. I mean, they got a lot of smart people that work at these companies. A lot of smart people work at Tesla as well. But don't kid yourself. There's a lot of smart people that work at General Motors and Ford. And they know the trends. They know we're going to autonomous cars. So, they're going to be in the electrical car market too here. So, I think, when you look at it from a valuation perspective, they're cheap, man. And if they can be a leader there in autonomous cars, this could be a stock. Detroit's back, Joel.
Yeah, I'm kicking myself. I mean, this is one we talked about, and I'm looking at the adding it to the long-term portfolio. Nice dividend, little dividend protection. You just, every time it gets to 38, you expect it to go back to 35. This is a nice breakout here. it's done on the heels of an upgrade. So I don't know. I mean, sometimes they just keep on going. 51's a nice price target. I don't think I'd be chasing it off the open. We'll see what happens. This is a real good mover. I'll just give you your pre-market high, 40.19. We're right there right now. So, I mean, if this thing holds 40, just keeps on going, you got a bona fide breakout. But congratulations to the GM show holders. We talked for weeks and months about the good earnings reports that they had, never being rewarded. And now when the cycle is supposedly slowing down in cars, this is when it picks up. Let's just take a look at Ford too. Dennis has been hanging on to this one, trying to get through the $12 level. This one really hasn't taken off yet. So you see 11.
Not as much.
Yeah, not as much. So we'll see here. Detroit back here in the auto sector.
I mean, there's a few things to think about here. And obviously, the one thing we were talking about this on the pre-market show is the biggest problem, I think, with Ford and GM is the labor costs. I mean, the unions still control these companies. And that's the one advantage that a Tesla might not have. Like if they, you were saying, if it's going to be robots making the cars Tesla, and it's still Ford and GM, obviously the unions are in control there. So there's a little bit of robots, but there's obviously a lot of humans involved there. And the labor costs are expensive. That's always kind of what's held the stocks back, because it's expensive. It's a big expense. So if Tesla's expense can eventually be cheaper, that might be an advantage that they'll eventually have. But when you look at the market caps, and this is what always been my argument, you look at Tesla having a market cap bigger than GM and Ford, it's a little bit scary for me as a value investor to go and invest into Tesla. I don't think it's coincidence here, that now they're talking autonomous cars with General Motors, Deutsche Bank on this, that Tesla got hit last week. Because I think some people, were thinking, Tesla's going to be the autonomous car, maker, and they're going to be the leader here. Well, Deutsche Bank is saying General Motors might be the leader here. So that's a consideration there if you're a Tesla shareholder. If you're banking all autonomous cars, they're going to be there. They're going to be there. Maybe they are going to be the leader. But GM and Ford aren't just going to go away.
And have you seen this Fiat Chrysler as of late? This thing is just...
Well, it's been in play.
Right.
So and it has been a monster. FCAU is how it trades over here as an ADR. But wow, that has been an absolute monster because it's been in play. They're talking, who's the potential suitor there? They've had multiple names there before, but Spencer, I'll throw you under the bus and let you do something.
For Fiat Chrysler, oh
yeah,
because it's been a while. It's been a few.
It's been a while.
It's been a few weeks. A little bit. Yeah, here, hold on.
I sent Spencer hunting through the pro but nobody can work that pro better than Spencer. He's fast.
Here, I'll find some. It's because it's been so long. It's been a few weeks. There's a while there we were getting it every day, every week.
Yeah.
With
it's still going up. So
it's still going up. Here's what we got. We got. I'm seeing Fiat Chrysler and
I see Geely.
Yeah. Oh, you know what? That was the Chinese automaker. That's what it was. There was a Chinese automaker that tried and failed to get to get Fiat Chrysler, right? And I think there was two. There was also talks with Volkswagen that they had back in March. But there was the Chinese automaker was more recent. That was in mid-August.
Yeah.
Then March was the talks with Volkswagen, and I think that is it.
Well, that thing's been straight up, new all-time high. We've doubled since July. I mean, just a pretty looking chart. If you're owning, congratulations. If this all of a sudden, if these talks go down, it could give it back. But but that thing is congratulations, people have owned that issue. Nice move, a doubler since middle of July.
One thing I'll say about GM is the note, this Deutsche Bank note that we're talking about this morning they did sort of play devil's advocate a little bit, and sort of like outlined like why people would potentially not feel the same way that they do. And one of the things that they say is GM no doubt recognizes that in the long run, they will be competing for capital with Tesla and Uber and Google. And all those competitors have tremendous access to technology at very low costs. And the technology spend is one of the things that they could see people criticizing GM for, that they've likely spent close to $1 billion on autonomous mobility alone. So, the costs are extremely high for them, and they are competing with, the creme de la creme of tech companies right now. So that is one reason that they acknowledge, you might not like GM or Ford.
I like it because they're competing, though. I like it because they know this is where we're going. I completely agree with Gene Munster when, we've had him on the show, and that's where it's going. It's going to autonomous vehicles here. People, in 25, 30 years might not be driving their own cars. They'll still probably be allowed to if they want to, but a lot of people won't. I mean, imagine, the possibilities where, you have your own driverless car. You just get in your car to go to work and you're sitting there just working in your back seat. You've got, probably all technology all on the new screens and that. And you're just sitting there and you're actually doing more work as you're driving. I mean, the efficiencies would be incredible. And, if you could think about, roads and stuff with autonomous vehicles and they can perfect it, I mean, you'd limit accidents probably too, because, robots just don't make mistakes. I mean, if they're programmed wrong, they do. But, if you get that all figured out, there's a lot of benefits to autonomous vehicles here. And I can see it, in 25, 30 years, being the dominant source. And, eventually everybody's just got their driverless car.
Not to mention just the areas of growth that enables. So just like data, right? All the data you can collect from that you can then sell. And that's all outlined in this note as well, is that they, self-driving they believe that GM autonomous vehicles are going to have artificial intelligence. They've already developed a fully redundant, mass-producible autonomous vehicle. They're going to have some sort of major connectivity and data advantage, just for the fact that if Deutsche Bank is correct, they're going to be the first to market. And just in terms of the data and then the infrastructure, that's a huge advantage right there. And there's so much more to it than just, the self-driving car aspect of it. There's what do you do when you're in the car now? There's entertainment. There's so much more to it than
do everything.
You do everything.
You're not driving it.
Right. Exactly.
Do anything.
You do anything you want.
You can make it in an office. I mean, you can make your backseat in an office working from it. That's cruise
Dennis,
along.
I think that would be very hard for you to trade from the back seat of a Tesla.
Yeah, no, from the backseat of a General Motors.
Or General Motors. Breaking news on PPG Industries here. They see Q3 $1.48 versus $1.55 versus estimates of $1.64. They're blaming the hurricane, and that's one thing I put in my, my Buy Rosh Hashanah, Buy Yom Kippur article is these hurricanes
I laugh when I see that title.
Hurricanes are not going to affect our GDP at all. We're going to lose no production from those hurricanes. It's actually going to have a nominal effect on us.
Well, that's what we'd like. The markets would like you to believe, and that's what the markets are pricing in. But you can see on individual stocks here. I think you're going to see it as a scapegoat too. I think you're going to see it on some companies that maybe we're already struggling, or having, a tough quarter. Well, blame the hurricane. I mean, we do see this happen. So obviously we're getting one coming out here. And, obviously a lot of it's probably legitimate, but there's probably some of it that might be a little bit of a scapegoat as well. So PPG trading down $1.76 here in the pre-market 107. They quickly hit those bids. Best bid is way down to 103.88. So this might have some more falling to do here, Joel.
Let me see. Let me look. PBG took out a big level here at, oh, come on. Don't freeze up on me. At 108, and now we are falling 106.81 here. Let me go to my dailies. I don't know. There's a lot of room in here. I'd say if 106 doesn't hold, double bottom there, you're easily trading in the 104 handle.
Also, we just got from the chat, Jimmy A is saying DHI has also cut. I didn't hear this. Was this from Friday or is this morning? Is this just happening right now? I know it is right now. D.H. Horton cuts cash flow forecast 50% due to hurricanes.
Ooh, Dennis, can you do some research today and tell me the biggest retailers in the state of Texas? Because right there, right? I know JCPenney.
Houston, what's got a big Houston presence?
JCPenney, I think they're headquartered in Plano, Texas, but there's not much meat on the bone to be sure.
Our chat's good. Let's just ask the chat that question too, because we know the chat comes in here and they always got some great ideas too, and they're watching those news wires as well. But yeah, DHI just traded down to 35.52. It might be a little bit overdone. 35.60 bid already. Best offers way up at 36.80, but that would put it down 3.5% here on the day. So those home builders don't usually move that much. It's a big move for that stock.
Did we take out 35 yet? Ooh, 35.
No, I don't
50.
think.
You don't think?
Look at that. Trade 200 shares, 300 shares. And obviously price discovery is still going to happen here, but that's the support it has to hold. Agree with you, Joel. 35 huge.
All right. So little hurricane hangover here in some stocks. We'll hopefully
you wonder like the cruise lines too here. This is my thoughts too. And did we hear from Carnival here this morning? Because Carnival was due to report. Did we hear from Carnival over the weekend?
Not yet.
Okay, so this is my concern here. Carnival's trading down. If we haven't heard from it, it's trading down ahead of the report. And CCL, RCL, like, is it going to show up in these quarters? Maybe not. But are you really going on your Western Caribbean cruise or in your Caribbean cruise right now? Like, if I had a cruise booked right now for the Caribbean, I'd be thinking twice. Like, I'd be like maybe, or if I was thinking about booking a cruise, I'd maybe hold off a little bit and at least wait till hurricane season's over. Because these storms just pop up. It seems like out of the blue, and 2 weeks later, you could have your trip booked on your cruise line a month from now, and then boom, you could be right in the middle of a hurricane, and then and they have to divert the ships, and it's just kind of a mess. Obviously, the cruise lines are pretty good; they get the ships out of there, but I don't think I always want to be going down to the Caribbean right now.
You know what? I didn't like cruises before the hurricane, so I'm not going to.
I've done two, and you know what? They're kind of fun, but. I actually like, you're on the ship. It's a lot. They take you there. They're fun, but they're expensive too. It's an expensive trip. So a good point being made though, just from the chat there. Who just made the point that they have already been hit. So, Spinner saying the cruise lines have already taken a hit. RCL is down fairly significantly, 125 to 115. Carnival Cruise Lines, 69 to 64. And then NCLH is the other big one, which is Norwegian Cruise Lines. And it's kind of looks like it's just hanging there. But I just look, at these things done on the weekly, though. And there was a big run up from 2016. I mean, Norwegian NCLH was $35 about a year ago. It's up at 54 here now. Carnival Cruise Lines was way down at $44, up at 64 now. I mean, yes, they've pulled back, but look at RCL, $70, straight up to 115, 120. Now it's 115. There's still a lot of meat on the bone on that short side there. If for whatever reason, my thesis would hold that people aren't booking as many cruises right now, maybe, guidance could not be that great coming from some of these companies, and then they would take a hit.
Unless you're going to Alaska, you got to take a cruise to Alaska. That's a good trip.
You did the Alaskan cruise, eh? How was that?
That's gorgeous, man. That is, and you don't have to
Northern Lights and stuff.
Well, we were there in August. I think we went to Ketchikan, Juneau. Can't think of the other places, but that's really something that you have to do. As far as going out in the Caribbean right now, I'll pass on that.
Jumping over here, Spencer. What else is happening?
I was just thinking about what happened in the solar stocks on Friday.
Oh yeah.
And so Gordon Johnson, if you don't listen to the show Thursday or Friday, so Gordon came on the show on Friday morning, and basically said that the impending regulatory decision from Friday was going to be really bad for the Chinese solar names if they do find fault. That they did cause harm, that these Chinese imports did cause harm to U.S. Manufacturers. That is what happened. The Chinese solar names got hit incredibly hard. Basically, Gordon called it money, 100% nailed it.
And yeah, so he got that. And First Solar, he was saying he thought, that was going to be the one that they were going to buy. And on that decision, so he said that stock was around $48. On that decision, it ran up to 53. So it ran up over 10% on that decision. Did pull back, trading 51.5 area here now. I'm interested in this. Is kind of a breakout here for First Solar on some good news for them. Gordon, I'd be interested to see what Gordon says now. Like, did he give like a price target or anything? What's his current rating, Spencer, on First Solar, and what's his price
for First Solar? Here, let me go hunt it down for you.
The nice thing about the Pro, you can just type it in under
Gordon Johnson, his last rating on that came out July 19th. He has a buy rating. I don't see a price target in here, so I don't know if he has one. But he's got the buy.
I thought he said like this thing could even see triple digits. Over what did he say? I can't remember on the show. Somebody and we, chat, help me out here.
On First Solar in particular, you mean?
Yeah, didn't he say this is huge for them if they get this decision?
Here we go. He said.
This was on our show on Friday.
Right. This is
nowhere
else. I'm just recapping. I'm going through the Pro a little bit. We don't have any specific comments on the Pro that recap. It was just like buy First Solar is what he said. Is what he said he would do.
Smith said he said 110. I remember $100 price target too.
Who said that?
You know what? Maybe,
in the chat.
Maybe you're right. You know what? I'm gonna do.
Maybe there was an analyst that said that. I thought I heard over $100.
I'm gonna put the link to Gordon's Friday segment in the chat.
Yeah,
right
do
now.
that. Get the link out there, and we can listen to that after too, because obviously he was right with this call. He's the sole reason that I own Canadian Solar, and he said he might take a little bit of a dip on this news, but he still liked it. It actually took a little bit of a dip and then started rallying. So I follow Gordon. He knows his stuff.
Yes, he does. He basically called it like it happened. One thing I did not, I forgot to ask him about, honestly, and I kind of just forgot what happened, was Tesla, right? Because Solar City, and didn't Tesla get a hit also?
Tesla got hit, but it was one of those days that they were hitting all the momos again. Okay. I mean, Apple has been, and we've got to talk about this too, because Apple's under $150 this morning. But Tesla got hit on Friday. You had Amazon getting hit again on Friday. Amazon is down here again. You've got this theme happening right now, and it's going from growth to value. We have seen this for the last week. A lot of and your retailers have started a couple of weeks ago. A lot of your retail stocks that were killed have been coming back, but you're seeing stocks like General Electric start to take off here now. Not coincidentally, General Motors and Ford have been moving up too, because they're value plays. And this happens, sector rotation happens, but it's not even sector rotation. It's like class rotation right now, where they're going, the market has been all about growth, all about growth. We hate value stocks. We're all about growth. Right now, that trade is reversing. It's not saying it's going to continue that way, but as of right now, value stocks are back in favor. So you're looking at those lower multiple stocks. Those are the ones that have been taking off. You have a higher multiple, you've been getting hit as of late. That's why Amazon getting hit, Tesla been hit there. And think about your other ones too that have their higher multiples. Those have actually not been doing as good. And stocks like General Electric, General Motors, Ford, your retailers, think your Kohl's and your Macy's, they've all been coming. Macy's not so much, but a lot of these stocks, the value ones, have been coming back.
All right, what time we got?
Oh, you're just quiet over there.
No.
You fall asleep here? Putting you to sleep?
No, sleep. I just my trade station is giving me a little problems here, so I'm trying to redo my layout of my other computer. But I'm back.
Let's bring it to Apple.
Ooh,
let's bring it to Apple, because we talked on the show when it took out 155. We're like, this could see 150. Okay, 3 days later, it's there. It's at 150. Now what? So I would say it's closed the gap. And now that, easy money from the 155 to 150, which we thought might be easy sledding because he had the gap in the chart there, is gone. So if you shorted from 155 to 150, congratulations here. What are you thinking on Apple now that it's filled the gap?
You let it keep going, Dennis. Why would you just all of a sudden?
Falling knife.
Yep, exactly. Just like the chat was trying to do an ICPT on Friday. Let it settle. Let it put a double bottom. To me, all of a sudden is people not going to buy this new iPhone or something, and it's not expensive and no pre-orders, or they're not producing it. All of a sudden there's all this news on it, and when what was it, a week and a half or so ago that Gene was on CNBC and he said he was looking for a 5 to 10% pullback in Apple, and
he started this.
He did.
When he said that on CNBC, because it went down when he said those comments, and it's been going down ever since.
And then 158. I am never going to miss a setup like this again. You had 5 out of 6 lows between 58 and 58 and a half. And then the day after he was on, I think it opened lower, boom, never gave you a chance over 158. Here you are filling the gap. So basically, throw out the last quarter. Those earnings mean nothing. We are back where we started here. So maybe see if you could put some support in here at 150. I see a double bottom here under.
I don't see much at 150 either.
148 and a half, folks. 148.41 was the low that you had. This was before the report. And another low, let's see here, 149.19. And then 148 and change. I'd say 148 and a half, 149. That could be a good target. That would probably fit within the, the 9 or 10 day average trading range.
But it's out of favor here right now. Sentiment's out of favor. Imagine it rallies a buck or two. You're going to have overhead supply because a lot of people here are caught from the last few days. So easier sledding is actually down. That's one thing about stock trading is when you get the path of least resistance, you can start to identify it. We identified this when it took out the support of 155. Now I have all that overhead supply. Everybody that's trying to, call the bottom 154, 153, and it filled the gap, 150. And they're all underwater here now too. They're all scratching their heads. The stock's down another $1.98. You got to put it in perspective. Apple has had a great year too. This stock started the year down at 114. It's up at 150. This is a correction, and stocks do correct. Could this thing see 142? It could potentially see 142. I don't know when, but I'll tell you, that is where there is a huge, well, that's where all the support in June and July was.
Oh, wow.
So when I really look at this chart and I want to say where the huge level is, it is 142. I would love this to get back to 142, and I own it, and I'm talking against it because I would love to buy more. And we know I sold my stock up there around the 150 area. Half of it I sold. I'd love to rebuy it at 142 if it got down there. And I think there's a lot of other people, investment managers, that would love it to get down there too. I don't know if it's got the gas to get there. We know I'm cheap. Sometimes, I wanted the Walmart level at 50 and it got to 56 and then ran. I wanted the Costco level at 145 and it got to 150, but then bounced and ran. So sometimes, when you get too cheap, you miss out on the opportunity there. But I just don't see that much in there.
No, there's not. And, the negative momentum market's holding up pretty well under the circumstances. But taking a look at the double bottom at 148.5, 149, minor stopping point at 145. Then Dennis mentioned, those 4 or 5 lows and lower 140 handles. So we'll be keeping an eye on that in Apple.
834 now. 834. Nope, not quite, Dennis. I got you. Time for our only break of the day. We're going to grab Michael Pachter. He's an equity analyst at Wedbush Securities. He covers tech stocks. He covers a lot of media stocks, video game stocks, Netflix, Twitter, Snapchat, ATVI, AMC, Pandora, to name a few. So we'll be right back with Michael Pachter. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick, and we're joined now by Michael Pachter from Wedbush Securities. Michael, how's it going today?
Good. Thank you very much for having me.
Thank you for coming on. So everything just keeps going up, Michael. What are you going to do about it?
I think you've got to pick your spots, and, some companies clearly have growth, and you can see that they'll keep going up. So I feel that way about Facebook. I feel that way about Activision. I actually feel that way about Amazon, although, they take a breather every once in a while and go into hyper investment mode. I'm not sure that that's true of all tech. So I don't feel that way about Snapchat or Twitter. And although I think Netflix will continue to rise as it grows its subscriber base, I just question the whole valuation model. I don't understand how people can value this company, higher than $70 billion when it burns over $2 billion a year in cash. And I'm just not in the camp that, that agrees that they're building something for the future. There are literally fewer than 5 shows that they own that anybody actually watches. So I'm not sure how you get $2 billion in spending on content when they're probably spending about $200 million a year on those 5 shows. I just flat out don't get it.
I want to ask you, Mike, about some of the movie theater stocks. So you cover AMC, you cover Cinemark, and you still have buy ratings on both those stocks, CNK and AMC?
I do. I actually only upgraded Cinemark on the break recently. I thought that they were a bit rich. And interestingly, Regal's the third big one. The 3 stocks dropped, and I'm rounding, so please don't have anybody check my math here. But the 3 stocks dropped. AMC dropped about 60%, Regal dropped about 40%, and Cinemark about 20%. And again, I'm just rounding to the near, to round 20, 40, 60. But AMC dropped the furthest, and Cinemark the least. So I think investors like that Cinemark has pretty good cash flow coverage on its debt. It pays the smallest dividend of the 3 as a percentage of their free cash flow. It is not over levered, and I think some investors like that Cinemark has diversified outside the U.S. and is invested in Latin America. I had found that as to be a problem over time because Latin American economies are odd and sporadically very, very weak. Cinemark's kind of defied gravity and really done a great job, or defied logic, done a great job there. So very profitable. And the three got hammered because the second quarter box office was just horrific. I mean, it was just really, really bad, down double digits.
That's what I want to ask you about. How can you be bullish? We just had the worst box office in the summer, almost the entire century.
Yeah, I think it's because my memory goes back more than 3 months. So, the March box office was an all-time record for March. And when I say all-time record, I mean March 2017 was the highest March quarter for U.S. box office in the history of box office. So the bears would have you believe that millennials loved movies in the March quarter and then suddenly discovered something else to do with their time and stopped going to movies in June. And they've concluded that single data point is a trend, is a secular trend, and no one's ever going to the movies again. The reason we've had a modest rebound in the last couple of weeks is that although the September quarter is tracking down double digits as well, you've had positive double digits ever since It came out, the movie. So suddenly they're back. And I think a simpler way to look at the trend is to say when there are bad movies, people don't go and see them. And when there are good movies, people do come and see them. So we just had an unusually bad string of major studio releases in summer, and mostly in the beginning in June. And box office was terrible because films like Pirates of the Caribbean just really underperformed expectations. September was bad, but it turned around in the month of September. And it looks to me like the Q4 box office is going to be phenomenal. We have very low expectations for Q1 of 18 because we're up against, as I said, the biggest March quarter in history. So yeah, it'll be down again, but you're going to get the spillover from Star Wars. And then when we roll into Q2 next year, you now have the easiest comparison we've had in a long time, both in June of 18 and September 18. So I would say in a year, these stocks are all right back to where they were when they started to decline. And with a 60% decline on AMC and a recovery of only 20% or so, you literally have the potential for a double there. Cinemark, probably not a double, but you have potential for probably 25% growth. Regal, kind of in between. I mean, I think Regal's probably going to pop back up to mid-20s from a $16.60 price. So that's about 50% growth. So lots of opportunity to make money. That's why I stay positive.
Mike, I want to ask you about regulation sort of in the social media stocks, Facebook, Twitter, Snapchat. Facebook obviously in the headlines for not the greatest of reasons right now, sort of at the center of this Russia controversy. There really is no regulation right now for any of these companies, this entire industry right now. I'm wondering if you see that changing going forward, and if so, what implications that has on these companies and these stocks.
So you're saying that you don't think that President Trump is right and this whole Russia thing's just a big hoax? Okay, let's accept that there probably was some Russian,
I didn't say that. I didn't say that. I'm just saying they're in the news.
I'm kidding. Look, in the U.S., it's tough. I mean, you can regulate reporting. I don't think you can regulate activity. So, the government can't ban the Russians advertising. They can, because it's free speech. And if the Russians use U.S. entities to run ads or to promote rallies or whatever on Facebook, that's free speech. They're allowed to do it. I think it's the disclosure of that activity that the government can regulate. So again, the First Amendment really is pretty broad. I'm not even sure if the government can regulate hate speech, the way that maybe the media would like them to. So those searches, to target people who hate a particular racial group. Again, it's free speech to say that you hate a particular racial group. So, we can't ban people walking with Nazi flags. We can hate them and we can say that they're outrageous and we can protest against them, but you can't ban it because that's free speech. So I don't know in the U.S. that these guys are going to get regulated in the way that your question suggested. I do think the government can require more transparency. They can require Facebook to report, hate speech. And if the hate speech incites violence, of course, that's the yelling fire in a crowded movie theater standard. I guess you guys knew I was a lawyer, right? I mean, I used to be a lawyer. The standard for limiting speech is when you create a clear and present danger. So if they can prove that the hate speech on Facebook, Twitter, et al. Leads to inciting violence, then they can regulate it. But that's really a tough standard, and that clear and present danger standard, that's a U.S. Supreme Court case. I don't think you're going to have regulation in the next 10 years that works its way through the court system. So I think more likely it'll be disclosure and greater transparency of who the advertisers are. So that's something Facebook actually has always strived to do. You're supposed to be a real person when you have an account. I know people who make up names, and obviously Facebook's got to do a better job cracking down on that. And the do-it-yourself advertising tool, I think, is what led to a lot of that, a lot of the controversy, that there were no humans actually reviewing what advertising was being put on Facebook. So Facebook will self-regulate and will have humans monitor behavior. The government, it'll take forever for the government to actually pass laws that have any teeth. Outside the U.S., absolutely. Outside the U.S., I think that you could see, individual countries be very, very restrictive. But I don't think that happens inside.
Mike, I believe you've still got a buy rating on Pandora. They have been frequent subjects of the M&A rumor mill with KKR and Sirius. Any thoughts on how that plays out?
Well, KKR's out. Now you've got a big investment, a $480 million investment from Sirius. The company has completely changed out its management team. So the founder, Tim Westergen's gone. They had fired their CEO about a year ago, a little over a year and a half ago. The CFO's gone. So we've got a new CFO started in February, a new CEO who I think starts today. I have to check the date, but I'm almost positive today's his first day. A new chairman of the board, new board members, which are all, Sirius or Liberty Media guys. Greg Maffei, chairman. So I think it's going to just have a complete makeover. They're in a tough sector. I mean, they're really good at internet radio, which the vast majority of listeners listen for free and have to tolerate ads. And that's, 70 plus million of their 75 million customers. That's a profitable business if they go with the statutory rates that they negotiated. Unfortunately, the prior management voluntarily chose to pay higher rates in order to have access to on-demand listening, and that's a really tough business. We've got Spotify there, obviously Apple Music, Amazon Music, Napster. There are just a gajillion services, and they're all very good. So it's hard to get somebody to switch. And I think Pandora's model was, if you're an internet radio user, you'll naturally just want to add this as a module. Well, that hasn't been working. So that led to, a swap out of management. And I don't know what their new strategy is going to be. New CEO, like I said, starting today. I just don't kick stocks when they're down. I mean, this thing went from like 40 down to 6. There's no point, if I was wrong all the way down, to say at the bottom, I'm done, I'm over with these guys. I think that their 75 million users is a huge asset, has tremendous value. And keep in mind that, Pandora is trading at, under $2 billion with 75 million users. Netflix is trading at 70 billion with 100 million users. So, how is it that there's such a wide disparity in value, and Pandora doesn't burn cash like that? Not even close. So, I think that the two stocks should actually converge, and Pandora's worth more, not, 20 billion, but worth something higher than 2, and Netflix is worth less. So I stay a buy because the asset is a pretty good one. That's its user base, and they're pretty loyal and they like the service. And I think Greg Maffei, the new chairman, is the smartest guy in the room. So I'm actually pretty confident that he and the Sirius CEO and CFO who got added to the board are going to kind of tweak things and make sure that this company is profitable. And you're right on M&A. Ultimately, maybe Sirius says this is an internet-based asset that we could use because we're one-directional broadcast through satellite. not interactive through the internet. And if we could add interactive functionality, then Sirius is a more valuable asset. So yeah, I think it makes sense for the two to combine, and I think the stock goes up from here.
We're on the line with Michael Pachter, equity analyst for Wedbush Securities. Michael, before we let you go, I just wanted to discuss your rating here on Best Buy and also Macy's, and just also get a bigger picture here. You know, we're still trying to ferret out how, you know, influential Amazon is going to be in the overall landscape of retail. We could see that they don't have the biggest percentage now, but they're moving up. And Best Buy was supposed to be the first one to go down to Amazon. It had its nice rally, and now it's looking weak again. So comment on Best Buy and Macy's before we let you go.
Yeah, and I don't cover Macy's, so I actually
sorry about that.
Intelligently talk about it. But Best Buy, Best Buy has gotten, they've executed flawlessly. So I will say the CEO has done a phenomenal job and really, really has kind of defended his niche. They also got, they were the beneficiaries of the Circuit City and Radio Shack and H.H. Gregg bankruptcies. So as those competitors went away and literally liquidated, Best Buy picked up a big chunk of sales. The truth is Best Buy sales haven't grown since 2011. So 2012 through 16 down every single year. This year, they may grow really modestly with an extra week of sales, and with H.H. Gregg bankrupt this year and with Sears shuttering stores, and Best Buy is primarily picking up that share in appliances. I'm not optimistic that they ever grow revenues, and I think they're done with cost cuts. I mean, we just went to an analyst day last week. They promised another $600 million in cuts. I think those are going to be tough to come by, and they're going to actually invest all of that in in-home advisors. I think investors are way overly optimistic about the level of traffic that 300 in-home advisors can drive. I mean, if they do, 10 million a piece incremental, which is a lot, that's literally 5 or 6 percentage points to the sales growth. And then what? I just don't think these guys can withstand the onslaught from Amazon. And please keep in mind that Jeff Bezos hates Mark Loray, who is the president of Walmart.com. Mark Loray has been mouthing off how Walmart's going to take share from Amazon. You don't mess with Bezos. So I see a price war at holiday between Amazon and Walmart in consumer electronics. And I think Best Buy is a casualty of war. They're in the crossfire and they're going to get bloodied. And I think Best Buy sees it coming. Their guidance implies a negative comp at holiday. These guys can't stay in business if they negative comp at holiday. And if they keep negative comping, they'll be around for 10 more years, but they are not going to thrive to the level that I think investors expect unless this service offering works. And I don't see it working.
Michael Pachter, analyst at Wedbush Securities. Thanks so much for joining the show today, Michael.
My pleasure. Thank you for having me.
All right. 8:51 now. What's doing, guys? Anything new?
Let's see here. S&P.
One thing I just want to say
before
you go to the S&P, because S&Ps are boring as hell. They're not moving. But you've had this move, happening here for the last couple of years. I was just saying before I had Michael Pachter on, from growth, to value stocks. And Amazon. Amazon's now down another $10 here this morning. Apple, we already talked about it, but you're getting to a point here. We were just talking about Amazon, obviously, with Michael Pachter here. You had the blow-off high up at 1083 when everybody had to own it, and then you had the sell-off, then you had a little relief rally. But where'd you get to? Right up to the psychological resistance of $1,000, right on the kisser. Perfect high back on September the 13th. And we've been leaking ever since. And you've got to identify these trends as early as you can. Like when you can start identifying trends where, hey, we're starting to see, some of these growth stocks come out and some of these, value stocks come to life. You can identify those trends early as money to be made, because it's not coincidence that GE bottomed, and GE and Amazon, nothing to do with each other. It's just the fact that GE is more of a value stock. It's a dividend play. And GE, bottomed right around the same time that Amazon topped. And if you can identify, they've been moving the opposite direction ever since. So even though these two stocks have fundamentally nothing to do with each other, because one is a pure value play and one is a pure growth play, you can just see it right there in the charts. The value stocks are back in favor and the growth stocks right now are out of favor. That can turn. You can identify the turn early, you'll be good too. But you look at Berkshire Hathaway, it's been popping up lately as well because a lot of value stocks in there. So, this is one consideration you got to identify when you're trading. That's why I always say, the chart will tell you one thing, but you got to use other tools. And, and overall, if you can have it put a little, portfolio of, or quote watch of value stocks, put a little quote watch of growth stocks. We start to identify those trends early. There's some edge there and some money to be made.
And alluding to that, Verizon and AT&T have taken
Those
off.
have taken off.
Yep.
Perfect examples.
That was on the heels of the T-Mobile and Sprint merger. I just not quite understanding.
But they started before that even, because the T-Mobile Sprint stuff was last week. We had the AT&T bottom out. Everybody had to sell it back. Same day. GE, same day GE bottom, September the 8th. AT&T, GE, nothing to do with each other, but they're both pure value stocks. And value stocks are right now back in favor. But, it's been a run year now. So now if you're coming in here on AT&T, and I was saying this on Friday, I feel like you're late to the party. I mean, Verizon bottom the same day again, September the 8th. That was like the turning point here for a lot of these value stocks. And it's been straight up ever since. But now you're up here at a big psychological level of 50. Now it's kind of a little bit too far. So, maybe you can identify the next turn. Eventually it will turn again. And you'll start to see, value stocks, go out of favor and growth stocks start coming back into favor. But these trends can last for a long time. So you just come in here and say, Amazon's going to bottom 945. Maybe it is, maybe it isn't. There is some support down there just under 940, and I do like that one level. Maybe you would point it out too, Joel, at 936, which that's low.
I don't know, though. I don't know about this time. The thing about this Amazon chart that's a little scary me, it's a little scary is, I don't know, not a head and shoulders on top of a head and shoulders, kind of. I mean, it's kind of a droopy right shoulder there. But you got,
I could see it.
Yep. And then you did it. You built your left shoulder. Now you're building another right shoulder here. That low that you're alluding to is at 936.33, and then you had another spike low in the low 927. But it's just kind of scary there. You could think maybe if this thing closes like under 940, they'll try and do some work here at 900. But not a great looking chart here in Amazon, trading down in the pre-market as well. Just straight down 943.80. That's
straight down.
Ooh, that's opening.
People are asking what's the news on Amazon. I didn't see a headline go by. I think, and you got to put in perspective. A 1% down, 10 points, only 1% on Amazon. Apple's down 1% this morning here too. And Apple, it's more of your value type growth. That's why I always like Apple. But they're moving. It moves right around with the growth stocks as of late. What do you think of Tesla here though? Trading up today. So Tesla's up $2 here right now. And I'm just looking at this as, hey, we've got some news. Deutsche Bank very bullish on GM. They're going to be the leader of autonomous cars. I don't know how that's good for Tesla. You got growth stocks getting, slammed here this morning here. I don't know. And this is for a day trade here, not long term. But I think this Tesla's a fade. This little pop here this morning. I think Tesla cuts through 350 today.
Yeah, and I think
maybe it gets down to the lower 340s here over the next day or two.
Well, you're pointing out that one low there that it had at 350 right on the nose, and then had the nice run up to the all-time high. Another kind of head and shoulders pattern there. Another head and shoulders top, but 350. You take that out, pair of lows in the lower 340 handle. I guess if you're looking for short this off the open, you want to keep an eye on the pre-market high. Looks like you have a seller sticking out just over 354. So it is trading green. I do kind of like that setup today, especially when you're talking about the move. Yeah, talking the move. A couple stocks in the chat before we wrap things up here. And soda has quietly been a monster this year. SodaStream, Dennis, we don't have time for your SodaStream story, but let's just take a look at this chart. Straight up hit 60.88 pre-market.
Straight up for 2 years.
Yeah. Especially with this whole move into water and everything. I'm kind of surprised this stock, but couple highs, just 60 to 61 looks like a tough area. High at 63 days ago, and then I see a triple top near 61. So another important areas for SodaStream. Dennis, any comments on SODA?
It's had a consolidation period. I don't know what the news is here today. It's up 2.5%. So that's going to be some type of news here. And Spencer, maybe you want to hunt because it's hard I never like trading a stock if I don't know the news. So it's hard to make a call on it. What is it?
I'm not seeing any.
It's got to be something on there. I go hunting here too, but I can
look. I'm looking, and I don't see
Price target raise
I see Susquehanna. That's
$90.
what I see.
Susquehanna.
Okay, Susquehanna, yeah.
Yeah. So it looks like Susquehanna. I don't know if that's an upgrade, but I do see the price target raise there. So positive comments from Susquehanna. That's got it. They raised the price target from $79 to $90, and that's why it's trading up here this morning. Up $1.50. I mean, there's major resistance up here, 63.25. That's been the resistance level. It gets above there. Then what's that all-time highs? Not all-time highs.
No, I think this one.
No, it got back in 2013 and really got overdone.
79.72. Another stock in the chat from Soho. Any thoughts on Costco earnings October 5th? And man, this has had a nice recovery. Well, not that much of a recovery, Dennis. Got really hit off the Amazon thing. I don't know how
160. Got to hold 160, I would say, because that kind of stands out at you. It was the old resistance level of August, September. Last couple of days, we bottomed at 160. Absolutely. If it's above 160, I stay in the bull camp. Below 160, close below 160, I don't want it. So that's your bogey. And you're right there, 160, 120. So it's right there.
Yeah.
But value stock, it's kind of, I would throw it more, and it's a little higher multiple one, but I'd still say it's more of a value stock. So those have been coming back into favor a little bit, although we haven't seen the last few days of movement in Costco. It wouldn't be your classic one, but it's the kind of stock that could get a pop or could rally. 160, as long as 160 holds, I'll stay in the bull camp.
All right. And what else do we have?
Imbalances we haven't talked about yet.
Okay, let's do some imbalances here.
Square, here's an interesting setup. Square, 77,000 shares to buy. $29, huge up there. I might be fading this one here this morning because of the whole growth value thing that's going on. I feel like some of these tech stocks or some of these stocks like Square, are not that much in favor. Although Square has held up well. And Square still, I like it long term. I mean, this is about relative strength in this. You cannot argue with this. And once it takes up 29, which it eventually is going to do, it's probably going higher. But I think as a day trade here today, I might be fading it just because I think you could open up into that resistance a little bit, especially with a 71,000 share buy imbalance. Pfizer, 130,000 to sell this morning. PFE, that stock is just kind of trading flat, but it's had a hell of a run here too. Again, that's a value stock. I mean, Pfizer, big dividend. That's your classic value stock, 3.5% dividend. So it's got a little sell imbalance. Alibaba, 34,000 shares to sell. Bank of America, 88,000 to sell here this morning. Let's go look at Snap and see if there's anything there, because sometimes it has some good ones. No, it's only 9,900. So Snap's small yet. They're kind of mixed, Joe, but mostly the sell side, I would say, if I'm just looking
with the SPOOs on their lows, I'm not real surprised. Pre-market low 95 even, just a tight trading range last week. So we will be keeping an eye on the low from last week, and that was down in the 2480 handle. Just real quick, Goldman Sachs, once again, this 230, man, this thing's been pesky. It got up there again. It's trying to break out. I don't know. It's filled here so many times. The one time it did it, it ran up to 235.83. But sustained closes over 230 is what I want to see here for Goldman Sachs. And for DC1, thoughts on OUT? I am not taking a look at this. Outfront Media, you know where you're at. I mean, 21 was a big level. October, November, knocking on the door here. I just don't like that it's come down to this area and really hasn't, had a major bounce. So play it tight to the vest, 21. If it does break below there, hope it come back and get above it. But just sitting too close to the lows of the move, I think, without making enough. Oh, look at that. I talk, and it's at 23.73. So what's the news on that one? Do we got any news? I need to look at the pre-market chart before I make my calls here. 23.73 OUT recommended by the New York MTA Transit Everton. All right, there's news. It better take out 23.73. That's a pre-market high. All right, look for it to go back down to that $21 area. Spencer, what else do we have for today?
That's really it for us today. Started a little late, but we're going a few minutes over. And as far as tomorrow's show, we're joined by Nick Shaheen, as we are every Tuesday. Plus, we'll have another interview with someone who will be at the Benzinga FinTech Summit, which is now this week. The Benzinga FinTech Summit is this Thursday, the 28th. I'll be in San Francisco for that. Kevin O'Leary will be there. The heads of some top fintech companies in San Francisco. Ron Suber from Prosper will be there. A lot of big people. If you want to learn more about that, go to bzsummit.com. Don't forget, you can also catch the pre-market prep on our podcast on iTunes, SoundCloud, and Stitcher, or go to youtube.com/BenzingaTV to rewatch the show as it aired live. That's it for us, folks. Have a good rest of your day. We'll be back with you folks on Tuesday.